More about this. We're going to try to break down on what's moving the global markets and why. Steve Hanke, professor of applied economics, Johns Hopkins University in Baltimore. Good to see you. And also California State University economics professor Sohn live from Los Angeles. Welcome to both of you, gentlemen. Steve, let me start with you. The issue of the global market turmoil. A lot of people are blaming China. Some people are blaming the U.S. Fed. Some people might blame you or I. Does it matter what the reason is on what started the global market turmoil?
Well, it does help if you understand where the source of the problem is. Can you imagine not understanding where the source is? Then you're really in a pickle. I think there are various sources, and one obvious source to me for some time has been the dramatic slowdown in the rate of money growth in China. And money growth determines the growth in nominal GDP, and the trend rate of growth in money in China has been running around 17% per annum, and since late 2012 it's dropped down almost in a straight line down to 10%. So there's been a dramatic decline in the growth of M sub 2, they call it, that's broad money in China. This means the economy is slowing down or will slow down. It's baked in the cake. There really is nothing they can do about it in the short term. So I'm not surprised that the stock market that went soaring up over the last year is coming down to earth.
Professor Sohn, I want to get you in on this. Look, I don't think it's a secret that the Chinese economy is slowing. I think everyone pretty much agrees with that. What they disagree with is with how much it's actually slowing down. Now, we're not going to argue about that, but I think what is interesting to point out, though, is world markets are very, very anxious about this because they don't know exactly how much it's going to slow down. Is there anything that the Chinese government can do, in your mind, to calm sort of these concerns?
Well, first of all, the Chinese economy is slowing, but not as much as you think. As a matter of fact, the property sector and even consumption, they are beginning to stabilize. The Chinese government has, as you know, cut the interest rate and reserve requirements, and then there are more actions to be made in the future. So economic growth is slowing, but I don't think it is as bad as a lot of people think. Also, when you talk about the Chinese economy, the future looks reasonably good because the government actions are forthcoming.
What about the stock market interaction? Some people have said maybe China did too much in the initial stages of the market decline. There's been a lot of talk that they were in the market buying a bunch of stuff. Now, more recently, they've said we're not going to do that. But yet they're asking the banks and brokerage firms to step up and basically buy stocks, asking companies to issue more dividends. All these moves, do you think this is what's best for the Chinese markets?
Now, we can argue whether the government is doing too little or too much, but the fact of the matter is the stock market, whether it's in the U.S. or in China, they always overreact. But there were some underlying reasons for the setback. One was, of course, the markets in both in the U.S. and China were overvalued, and so I think it was really time for a correction. The second reason is economic slowdown that we've talked about, and that obviously affects the economy. And the third concern has been devaluation by China. Now, market misunderstood the intent of the Chinese government. Really, the government was trying to liberalize the market, not trying to make Chinese exports more competitive. As a matter of fact, if you look at China's exports, well, they are competitive. Their market share is increasing. The global economy is slowing. Therefore, everyone's export is slowing. So I don't think really the government was devaluing, trying to get a bigger share of the market pie.
Okay.
Really what the government is.
Fair enough. So you're saying it's not as bad as some of those folks on TV. I won't say who is saying that. Professor Hanke, though, how about these numbers from the Chinese banks? The profits have not been good. In fact, if you look at the biggest banks, the profit has been this much. It's been awful for 2015. What does that tell you about the economy when the banks aren't doing well?
Well, the banks aren't doing well, and more important, I think, than the profit situation is the non-performing loans have shot up, and that means people just aren't paying back their loans on time. And one reason for this is that although the credit growth has stayed fairly stable as opposed to the money growth, that credit has been funneled into many state-owned enterprises. And when the credit all goes into the state-owned enterprises, those tend to be very unproductive. Many of them are really zombie operations, just sucking up useful credit and not putting it to productive uses.
I mean, would you say they're
sector,
basically going to default? They're throwing good money after bad businesses. Am I right?
Yes. This is what happens when these non-performing loan numbers start going up, and we don't know how credible those are in China. By the way, they might be significantly higher than the numbers that the banks are reporting, because the banks might be just renegotiating bad loans and extending them and so forth, and therefore they don't technically qualify as a non-performing loans. But
let me get Professor Sohn on this. Steve, hang on one second. Professor Sohn, do you think that we are understating or overstating the problems on the banking side of the business? Because this is a really big deal. If the banks aren't well, the economy can't be well.
Probably understating the problems. However, let us not forget the fact that 4 largest banks in China, they are really government-owned or government-controlled banks, even though they are technically privately owned. And as a result, they make policy loans. The loans made by those banks are really government guaranteed. So even though if you look at the problem loans, it is probably much higher than what the statistics or government says. But I'm not really concerned about the quality of the banks and the future of the banks, as well as what it can do for the economy. Again, they are government-controlled banks, and then once the government guarantees, I think those loans are good.
I only have another minute, but I do want to get both of you to respond to this particular issue. Professor Sohn, let me start with you. This crackdown on some journalists, one journalist has already admitted that he or she spread panic into the marketplace. They've gotten people from the banks to admit that they were monkeying around with the markets. This is a really big deal because the free markets, in essence, allows people to buy and sell, whether or not they fear or they're scared or they're greedy. They can base their decision on whatever they want. How significant is this when they're going after some journalists and some people in the banks? Who's right and who's wrong?
Well, again, I don't know all the details, but if someone is spreading false rumors, breaking the law, I can understand why the government wants to crack down on the person. But one point that I'd like to make is that compared to the U.S. market, the Chinese stock market is very speculation-driven. There are a lot of individuals trying to make bucks through speculation. So as a result, I think the government has a really reason to crack down, make sure that it stabilizes.
Professor Hanke, quickly, do you agree?
Well, quickly, the big problem in China is that they made the exchange rate more flexible in 2005 at the encouragement of the U.S. So the U.S. is really at fault here, because the U.S. thought by doing that, the yuan would be ever appreciating. And that's exactly the strategy the U.S. started in 1971 with Japan, to have a flexible exchange rate in Japan, have an ever appreciating yen, which was true. It was 360 to 1 in 1971, and it was 80 by 1985. That's the reason Japan collapsed. So they have to fix the exchange rate in China like they do in Hong Kong. That is the big problem that they are going to have to deal with.
Professor Hanke, Professor Sohn, both of you, thank you very much. I wish we had more time. My producer, Alex, would, of course, not let that happen. We're out of time. Thank you very much.